Hello, everyone. My name is Monish, and today with us we have Mr. Vinod Sudhindra. We've had some really interesting conversations in the past about real estate, about Dubai. If you feel like it, you should go and watch it. I'll leave the links over here. But today we are going to have slightly different conversations on passive income. What is important for passive income? How you can start generating passive income for yourself. So, hi Vinod,
Hello, Manish.
how are you doing?
I'm good. How are you?
Bright and sunny day today.
Yes,
Yes.
as always in the UAE.
Yes, indeed. So it's lovely to have you here.
Yeah,
So let's get started. I want to talk to you a little about passive income. With the importance of cost of goods getting higher today, it is very important for people to have secondary source of incomes. And I am sure people are always looking for side hustles for passive income, but no one is really sure how to get started, how to research on passive income. So can you just shed some light on that?
yeah. So, very hot topic. The reason being, I was watching a video of Ray Dalio, who is one of the billionaire investor in the US, and I like his thoughts, in terms of what he talks about investing principles and how to go about things and all that. So, one of this video where he specifically is addressing to people in their 40s and 50s, right? I mean, you must watch it, sometime. It's a one, though you're not in that age, but you must definitely watch it because you're going to get there soon.
Yeah.
Right. So, two key principles, that he talks about in that video, which sort of connected to me. One is the power of compounding.
Right.
How compounding works in all areas of life. Definitely, it works in the case of money, and it's it works at all ages. It's best to start investing at the age of 25, 30.
Yeah.
Because the power of compounding and the time is on your side. The power of compounding will work very well. However, in your 40s and 50s, it's not too late, but you don't have time for any trial and error now.
True.
Right? So you got to really look at something that's going to really help you generate more income and enough time for you to compound your money. The other aspect that he talks about very interestingly is to create passive income.
Mm-hmm.
Right? So how to really generate passive income and why everyone should be actually looking at doing something, generating income beyond their profession.
Mm-hmm.
Because let's understand what happens when your profession is your only source of income. So when your profession is your only source of income, you're trading your time for money.
True.
Right? Trading your skills for money and trading your maybe physical strength for money. Now, what happens when you don't have that? What happens when your skill is no longer
Required in the
valid?
market. Yeah.
Right? So, what happens when you are not able to work? It becomes very tricky. So, how do you really create parallel streams of revenue so that you're no longer dependent on one source of income?
Indeed.
Right? That's where the thought comes from. And the other reality today is that the life expectancy is going up.
Yeah.
Right. So earlier we would talk about 65, 70 years maximum life expectancy. But today it is in the range of 80, 90, even 100.
Yeah.
Yesterday Putin and Z were talking and the camera caught where they're talking about longevity.
Mm-hmm.
Where they're talking about in this generation itself, we're going to see people living up to 100 years.
Yes.
Now, what are you going to do? You're going to stop working at maybe 60, 65 maximum.
Yeah.
And you have to live another 30 years.
True.
What are you going to do? How are you going to fund yourself? Are you going to be dependent on others? Or do you have a proper plan? Right. So extremely important for anyone, even so important for someone who's in their 40s and 50s. Right.
Mm-hmm.
So very important.
I completely agree with you. And I think the trend why more and more people are interested towards passive income today is because of the rise of AI that we've been seeing in all parts of, professional careers. Where earlier it used to be just a simple GPT that used to do things for us. But now there are real life AI agents that you can put in place that can get done tasks or completely with any hassle. And more and more people are losing out on their primary source of income because of that. The amount of layoffs that are happening as well, right? So completely agree with you, and I think everyone should get started with understanding what a secondary source of income is like and how to even get there. So tell me one thing, what are the primary avenues of passive income? how can one research about these avenues and probably get started as well?
Yeah. So, I mean, there are multiple ways to do it.
Yeah.
One, of course, you can start a side hustle, side hustle, side business, and which can be beyond your work and beyond your thing, provided your employer allows it. I mean, I'm not talking about, I'm not promoting moonlighting in
Moonlighting,
this
yeah.
video. I'm just
Yeah.
saying, yes, provided you've taken due permissions from your employer and
Right.
provided, you have the necessary go ahead,
Yeah.
you could look at one of one of the side hustles as an option to generate passive income.
Yeah.
Right. Having said that, it's not easy.
True.
Right. I've done it myself. I've created businesses that are providing passive income now.
Yeah.
I started 10 years back and now it's running on its own. But for every one business to be successful, there are 99 that fail.
Indeed.
Right. So it's only 1 out of 100 that succeed. So it's not going to be that easy journey.
Yeah.
Right. And sometimes you'd put time, effort, money also, and it may not really work.
Yeah.
Right. So you got to be very careful in doing that. Right.
Indeed.
So you got to know. So if you are someone who has the skill, who has an idea,
Yeah.
and if you think that's going to really take off well, and if you think you can create either a product or a business out of it, and then which can produce parallel stream of revenue.
Yeah.
Because understand one thing. Now there are two kinds of businesses. One where you have to give time to run that business.
Indeed.
I'm not talking about that. That is as good as profession.
Indeed.
Right? So I'm not talking about that. I'm talking about businesses or product that you're creating, which can eventually make money for you.
Yeah.
It could be a podcast.
Yeah.
It could be a YouTube video that you generate. It could be a Instagram income that you generate.
Yeah.
But all of us know particularly when you come to these kind of aspects, it's 1 in 1,000.
Indeed.
Whereas for business, it is 1 in 100. It's 1 in 1,000. But if you are someone who has that confidence, who has that talent, who has that skill, definitely today there are opportunities that are available for you to create that kind of a parallel revenue stream.
Yeah.
But if you are amongst the others, who feel no, that is not something that's going to be easy for me, the next available option for you is to make your money work for you.
Yeah.
Right. So how do you put your money to best use so that your money can actually work for you?
Yeah.
When you can no longer work or when you don't want to work.
Yeah.
So when it comes to that, of course, when you saving habit, investing habit, all of this come into play. But it's not just saving and investing, but it's about saving and investing in the right tools. That's what matters. Now, when it comes to this, what are the options we have? Of course, we have debt. Now, when you look at debt instruments, what I mean. So if you look at debt instruments, in my opinion, debt instruments at best help you protect from inflation.
Yeah.
Because the kind of returns that you're getting, maybe 6-7%, and these days you're talking about inflation in that range.
Yeah.
So at best, your money is not getting eroded in value. It is retaining its value. There is no growth.
There's no growth. Yeah.
There is no real growth. There is no inflation adjusted growth there.
Yeah.
Right. So to that extent, for me, debt instrument, you could put a part of money just to, for the rainy day. And if you're someone who's risk averse, you could put a part of money there. The next option is equity. Right. Wonderful asset class. Something that can help in wealth creation, something that can help in creating passive income. Good option, right? Good option. I have good experience of, creating good amount of wealth using equities as well. But has again its shortcomings in terms of what happens with equities. The dynamics change quite frequently.
Yeah.
Right. So what do I mean by that? Let's say you're upbeat on a particular industry, particular company. Now, in no time, with the kind of evolution that's happening today, in no time that industry may be obsolete.
Yeah.
That company may be obsolete.
True.
So to that extent, you can't be so passive that you're not even watching the trends, you're not even rebalancing your portfolio, etc.
Yes.
You got to be a little more active in doing all of that and making sure that you're at least catching the trend.
Yeah.
Whether something is going up, whether something is coming down, you're catching the trend. Otherwise, sometimes you may make good amount of money in certain period, and because you didn't catch the trend, you may lose all of it.
Yeah.
Right. So hence, it's important for you to look at that. So hence, if you are someone who has that orientation towards looking at all of these things, equity presents a good opportunity. But having said that, equity, is possible only with the funds that you have.
True.
Right? So you have X amount, you can invest that and try to make money.
Yeah.
And that's where my favorite, as you always know, real estate comes into play.
Yeah.
Right? So for me, real estate gives a little bit more stability than equities. Why do I say that? Right? So the dynamics in real estate do not change as frequently or in very short period of time as equity.
Yeah.
If a city or a location is good, unless something drastically happens in that particular city or location, or unless some other city or location does exceedingly well, that money from here is moving out, the dynamics remain same.
True.
I'll
The
give a simple
cycles
example.
are slightly longer.
Slightly longer. I'll
Yeah.
give a simple example. South Bombay.
Yeah.
Right. So South Bombay in India has been a good real estate market, not now, from decades.
Yeah.
Right. That has not changed.
Yeah.
Right. So of course there must have been some other upcoming location which has made more money for investor, but somebody who is in South Bombay has never lost money.
Yeah.
Unless you're a distress investor
Seller, yeah.
where you sold something at a wrong time. Right. So likewise, if you look at real estate, there is far more stability.
Yeah.
Of course, if you identify the right place, right city, and all of that, there is far more stability in the kind of returns that you're going to get.
Yeah.
And the biggest advantage in real estate is leverage. Right. So you not only are creating passive income on what you have, but you can also add on the mortgage element.
Can you please explain a little?
Yeah, I mean, the simple mortgages everybody knows. I'm
Yeah.
sure people who are listening to this podcast would have home loan for themselves.
Yeah.
Everybody knows a simple mortgage.
Yeah.
So I'm not talking about that. That I'm sure all of you know. We may have taken mortgage for a house that we live in.
Yeah.
Maybe some of the investors may also have taken for the second property.
Yeah.
But I'm talking about much beyond.
Okay.
I'm talking about a concept called as refinancing. I don't know how many of us are really aware. So I have taken a home 10 years back. I have taken home loan on that, which was basis the value 10 years before.
Right.
But today the value of property has gone up.
True.
So where banks are willing to refinance and give you more loan at the same interest rate that you have.
At today's rate.
At today's rate.
Oh, wow.
Right? At the similar interest rate that you may buy a home loan. Maybe it may be 0.5% here or there.
Okay.
But broadly around the same interest rate.
Okay.
Now that's a huge advantage for you.
Mm-hmm.
Right? Either you putting in fresh money and buying a property, you can immediately go for refinancing, or you have a property that is 5, 10, 15, 20-year old. You could have ancestral property where it is now passed on to you.
Yeah.
There are many aspects. Now that's a asset that is sitting without being leveraged.
True.
And if you happen to do that, that's going to unlock cash for you like anything.
Mm-hmm.
And you can use that cash to reinvest in some other good properties,
Mm-hmm.
and thereby generating net positive cash flows from
Right.
your investment. And I was just sitting with an investor where we were working out a strategy. He said, "Hey, look, Vinod, I have 2 million AD. I want to invest.
Okay.
I want to buy a property. Just tell me something. What are good?" So I said, "Are you willing to just look at some creative solutions?"
Mm-hmm.
And for the sake of it, he said, "Yeah, why not? Let's look at it." So we started working out on some solutions where using the same 2 million dirham, instead of buying one property, you can actually buy 3 properties.
What?
Yeah. So using refinancing options, using some smarter methods, you can actually buy 3 properties, which could be worth 4 million.
Okay, wait. Let's just pause for a second. Okay. You're saying we can refinance. Okay. That gives me 2 houses,
Yes.
right? But how do you get to the third one?
Yeah, that's the interesting part. I mean, that's where you need to book a meeting with me to understand how it happens there.
Okay, all right.
Right. So yes, there are ways to do it. Instead of just 2, you can actually buy 3. You can split your funds in a way that it into some good rent generating properties, some good capital appreciating properties, and all that. So in a way, your 2 million that you invest today, without any risk, without any undue risk, you can double it in a matter of 3 to 5 years.
Okay, wait. I am still a lot more curious. And just for the sake of our viewers, can you please tell me, how do you get the third one? How do you get the third one? Because I know with what you said, with refinancing, I can go from 1 to 2, but how do you go to the third one? Can you?
Yeah.
give me
So the
slight
only
information.
smart thing to do is when you refinance, right? Let's say you have 2 million ready cash or 1 million, whatever that amount may be. You buy a property, you immediately go for refinancing.
Okay.
So the amount that you get, you don't necessarily invest in only one more property. You split that investment into two properties, one
Okay.
ready property, which will again give you rental returns immediately,
Yeah.
and one more under construction property, which gives you a flexible payment scheme, something like a 2080 or something like post handover payment plan, etc., where you're also investing in that. So, which is appreciating in value, which is also going to generate some rental returns once it is handed over. So, instead of buying one property, you're now actually buying three properties,
3 properties. That
right, in
actually
the
makes
same
sense.
amount of money that you have, and with the least amount of mortgage. I mean, of course, you can buy three properties by taking mortgage on all three properties.
Yeah.
Like if I say 4 million,
Yeah.
right? So if I take a loan on all properties,
Yeah.
like on an average, if I even take 70%, I mean, first property will get you 80%, second properties will get you 60. So if you take an average of, let's say, even about 65 or 70%, we are talking about on a 4 million property, mortgage of 2.8 million,
True.
right? Now I am talking about a strategy where mortgage is only half of that, 1.4 million, right? So that's where, the play comes in. That's where the interesting strategies come in. So how do you really utilize all of these things? So how do you really ensure that you're playing on the money that is legally available to you in terms of refinancing and mortgage and all that, and yet get a better property?
Okay. First, I was curious. You got the third property. Now you're saying you got it for half the debt
Yes.
that you would actually get 3 properties for.
Absolutely.
Spill the beans, please.
Absolutely.
Come on.
Yeah. So of course it requires very detailed calculations and
Okay.
something that we will have to sit on one to do that.
Let's just do like a macro calculation and understand.
Yeah. So as I said, it's the only mortgage that you have here is the first property refinancing that you've taken.
Okay.
Right. Rest everything is funded by either that funds or through developer provided payment plans. Right. So you're
Okay.
not having any mortgage or any liability as such.
Okay.
Right. So that's the whole thing. So there are such smarter ways to plan around your investments, and that's where the what we're talking about, passive income. So that's where it really becomes interesting. And there is one more interesting concept as well. I don't know
Okay.
how many people, very few people may be knowing about this,
Okay.
and this is called as reverse mortgage.
Reverse mortgage.
Yes.
Okay.
Right. So reverse mortgage is a type of mortgage that is available for retired people, particularly if you're above 62 years.
Okay.
Now, let's say, I mean, you're someone who has a property and your children are either not interested in that inheritance. They're saying, dad, mom, you guys enjoy your property. I'm doing very well for myself. I will take care of this thing, but I don't need any, money from the property that you have made.
Okay.
As long as you're happy, it's fine. Or there could also be people who don't have any kids or don't have any children, that kind of a scenario. So this works in a scenario where you are not having any plans to pass on this property to your next generation, but you want to use it
For yourself.
for yourself.
Okay.
Now, this reverse mortgage can really come in handy and provide you a regular income as long as you're alive.
Okay.
Right? So the banks are going to fund the amount basis the property value as of today. The only thing is it has to be mortgage free when it is given for reverse mortgage. And if it is mortgage free, which I'm assuming it would be, right?
Yeah, because by the time you're
By
60,
the time you're
70,
60,
yeah.
62, I mean, you would have freed up the house from the
house,
mortgage.
Yeah.
And then you can go for reverse mortgage. And again, as I said, there are nuances to be looked at. There are fine prints to be looked at. There are a lot of those things. But I'm just saying on the surface of it, such strategies are available. And real estate helps you on all these aspects.
True.
It is not something that is available in the other asset classes.
Yeah, I mean, I haven't heard anyone take debts or loans for investing in equity market or the debt market for that matter. But yes, I think pretty much I've heard about people doing the same for real estate asset class.
Correct. It's available in all Fairness, even loan against share is available. If you have equity, you can
But I think the
leverage.
percentage is very
The
less, right?
percentage is very less,
Ah,
right?
yes,
Compared
yes.
to property. Property, you get sometimes 80-90%
Yeah, yeah, yeah.
on the existing value. Whereas for equities, there are a lot of conditions. It has to be only blue chip companies. It has to be certain percentage only. And if the value comes down, they are going to uh, come back and close the the loan, etc. There are going
Yeah,
to be a lot of those hassles. But with real estate, it is far easier, far better.
very interesting.
So that's where I would say it is. First of all, it's extremely important for everyone to plan their passive income.
Mm-hmm.
It's really important because we're all going to live much longer
Yeah.
and much against our wishes maybe at times because quite frankly, long life is a blessing. I
Yeah.
mean, no doubt, long life is a blessing, and medical science advancement is also a blessing.
Yeah.
However, if you don't have money, it can be a curse,
True.
right? So it has to be planned well.
Yeah.
And of course, every asset class has its place, but real estate can, by far help you plan that in a much better way.
Better way.
And that's what we always would suggest our investors.
That makes sense. Okay, so now tell me one thing. What if someone doesn't know the details of the whole planning that you did right now? How can one get in touch with you? And how can one, avail these secrets for themselves and use it for themselves?
Yeah, so of course, I mean, it's free. I mean, I'm available. I mean, we can book a meeting. We'll be happy to have a coffee and discuss all the strategies, in terms of if you already have property,
Yeah.
because, we also do property management services. When I say
Okay.
property management, not just putting it on rental, it's about how to unlock
Yeah.
the most value from the property that you're owning.
Yeah.
Right? You may have bought properties 5 years, 10 years back, and it may be just lying there. So, how do you really see if what you're doing with the property is in line with the current trends,
Right.
right? So, whether it's a property for you to hold, whether it's a property for you to sell, whether it's a property maybe for you to buy more in that area, we don't know.
Yeah.
So, we also do such detailed portfolio management analysis. So,
Okay.
we'll be happy to get on a conversation with investors who are really keen on doing this.
Sounds good. Thank you so much for that. And when you're listening this, make sure that you grab this opportunity. And no matter if you have any real estate at present or not, you can definitely get in touch with Mr. Vinod Sudhindra and unlock this planning and make sure that you can create wealth for yourself and for people around you. Thank you so much for watching. Please subscribe to this channel, give a like, and share it with everyone. Thank you so much. I'll see you in the next one.